Alrighty, now it's time to talk to our first guest of this week's episode. And as usual, we're going to talk to one of the journos in the team, or rather editor. We've got the editor of our sister website, yourmortgage.com.au. That is Brooke Cooper, who's recently published a piece to the Your Mortgage website on whether banks are breaking up with mortgage brokers. Obviously, brokers are very popular at the moment. So it's like nearly 80% of people actually go through a broker whenever they're taking out a new home loan. But it actually costs the banks a fair bit of money because they have to pay an upfront commission to the broker and then also trailing commissions for like every year that customer sticks with the bank. So it's costing them a pretty penny. And that's why we're starting to see the big banks offering these direct to customer products only, as in it's not available through brokers at all. It's only available if you go directly with that broker, with that big bank through the website. So yeah, Brooke's written a pretty insightful piece on this, and pleased to say she joins us now. G'day, Brooke.
Hi guys, thanks for having me.
Great to have you back, Brooke. Fascinating topic for anyone such as myself, potentially buying a home and weighing up the pros and cons of brokers versus going direct with the bank, or comparing your home loan options on savings.com.au or Your Mortgage for that matter. But before we get into all that, what is your savings tip for this week?
Yeah, so my savings tip for this week is if something isn't up to scratch or you're just not using something that you've bought, return it, ask for refunds where possible. There's been a few times lately that I've actually walked away with a better deal than I thought just by asking if I could have a little bit off, or if something isn't quite right, returning it. So in Woolies, if the fresh food people, if their fresh food isn't actually that fresh. So I bought a kilo punnet of tomatoes not too long ago, and I got home and a few were moldy. I needed them for that night, so I ran back into the store to grab a new one and asked, can I get a refund for this? And not only do they refund you at Woolies, they'll refund you and replace the item. So I got my $8 back and I got my kilo of tomatoes and they were fresh and I used them for dinner that night. Just yesterday, actually, I went down to the main street in Brisbane and I bought myself a new concealer. But that morning I had found an old concealer in my makeup bag that I'd never even opened. I bought that from Mecca. So I went down to Mecca and I said, I need a new concealer, but I have this one that I haven't opened yet. Can I have a refund on that? And I walked away with my new concealer, essentially without taking any money out of my pocket, because that discount from the refund covered the cost of the new concealer I was buying. So that was a little bit of a win. And then, again, the third one, a few weeks ago, I was at a restaurant and the service just wasn't, it's a really lovely restaurant. I've been there many times and I'll go back. It was a fantastic restaurant, but we got our drinks and they took a while to take our order. And then there was nothing on the menu that I could eat. I have certain food issues. I'm vegan, so I have to make sure that what I'm eating is appropriate for that. And they didn't have anything on the menu that night. Everything was out of stock, but it took them about 45 minutes to actually figure that out. So I asked if we could have our drinks comped, and they comped that for me. So if something isn't quite right, just ask and bring products back if you're not using them and get refunds.
Yeah, certainly doesn't hurt to ask. And as they say, squeaky wheel gets the oil. I've definitely noticed that myself. I'm not one to usually complain about things, but I've just noticed on those rare occasions that we do, at least ask a question. I remember we were at a restaurant in Glasgow, of all places, in Scotland, and we ordered some nacho. Yeah, it was some nachos, and it was really not up to standard. It was just like a plate of corn chips with a tiny little drizzle of cheese on top, and we were like, "Sorry, is this actually the main portion, or have you given us the starter portion by mistake?" They're like, "No, sorry, we totally get it, but no, that is the main. I'm sorry. That's I'm going to get my manager over to talk to you guys." He came over and talked to us. I was like, "Oh, yeah, well, we're just talking to that waiter, just asking a question," and he said he'd bring you over, and then. Yeah, sure enough, he was like, "Yeah, I know. I'm sorry. It is the main point. You know what? I won't charge you guys for that." And we didn't even ask for that, and they just gave it to us. So certainly doesn't hurt to ask there. So I'm with you there, Brooke. Okay, so on to this topic. You've written this piece now. So just straight off the bat, why do banks have this love-hate relationship with brokers?
Yeah, absolutely. So brokers bring in, as you mentioned before, Dom, the majority of home loans in the Australian market. I think nearly close to 80% of home loans, nearly 99 billion, I think was the number in the March quarter, were written with the help of a mortgage broker. So it's a huge market for banks to tap into that mortgage broker channel to get business, but it does come at a cost. So banks pay brokers both upfront and trailing commissions, and that really eats into their profit margins. So There's a new report out by S&P Global Ratings, and it mentions that banks generally pay a broker about 0.65% of the drawn down amount of a home loan. So if you're buying an $800,000 house, you've got a $100,000 mortgage, your broker, if you go through one, might get a $700,000 mortgage. Your broker, if you go with one, might get 0.75% of that $700,000 upfront when they sign your home loan, which is significant. And then ongoing every year, they'll get around another 0.15% of your home loan's value in trailing commissions. So it's big business. It can be lucrative and it can cost banks significantly. Even CommBank says that their broker written loans are about 20 to 30% less profitable than their direct to bank or proprietary, as they're called, home loans. So that's where that love-hate relationship and that pull and shove comes from between banks and brokers.
Yeah, it's certainly a business model that naturally, if you even scratch beneath the surface, you start to question the motives. And I think that came under fire in the Hayne Royal Commission about a handful of years ago, I think 2017, 18, around their sort of the broker's fee structure and things like that. Of course, we should also say that we're somewhat in natural competition with brokers because we are a suite of financial comparison sites. We do compare home loans, but yeah, this new research is certainly newsworthy, which is why we're talking about it. And I think too, like we can probably talk about this like a little bit later, but brokers with so many resources out there nowadays, such as our websites, they can be kind of redundant, and it really depends on your individual broker as to how useful they are and how useful they are after you want to refinance away from that home loan. And we've seen with CommBank too, their new Digi home loan is really competitive because they want you to go directly to the bank rather than deal with the broker. So, some food for thought there if anyone thinks to question the value of brokers. My next question for you, Brooke, is, we talked about CommBank, we talked about the big banks. Why could they instigate a shift away from brokers, and what could that mean for borrowers?
Yeah, absolutely. So for borrowers, that shift is, as you guys mentioned, those digital home loan products. That's kind of what we're seeing as the main, the first step in that shift. And it's the main one that S&P Global have been talking about. So with the exception of NAB, now all four of the big banks, so three of the big four banks, offer a digital product exclusively to people going directly to their website and applying for a home loan there, or in the case of ANZ, their app. There's also Unloan, which is CommBank's digital-only brand. So it's a separate brand from CommBank, but it was built by CommBank. It's part of the CommBank suite. It offers the lowest rate out of many lenders. I think they're offering 5.49% per annum right now on a variable rate, which is really competitive. CommBank's Digi home loan, as you mentioned, ANZ Plus has a variable rate home loan. These are all the lowest variable rates advertised among those big banks' suites. So that's significant, and it's only available to borrowers who go directly through the bank's own channels. In some cases, they're only available to refinances. They're just kind of getting off the ground a little bit now, so they're not quite in the stage where they're accepting brand new home loans. Sorry, Harrison. But for refinances, that can be where you can get potentially the best deal. And this shift will probably continue as we go forward for banks trying to shift away from that more expensive broker channel into their cheaper, more profitable direct channel.
So, Brooke, I guess in light of this shift and all these Digi direct only home loan products coming to market, do you think the brokers' stranglehold on the market is in trouble?
Well, as I mentioned, it's going to be gradual if any change is seen. It's not going to be overnight. We're not going to wake up tomorrow and find mortgage broking isn't a business anymore. And it's a huge business right now. I think we mentioned before, it's nearly 80% of new home loans are written through brokers. For borrowers who are confident comparing products, negotiating their own way, going direct can potentially save you money. Going digital can save you money. But if you're unsure, if you're a little bit of a complex case, maybe you just want some guidance, a broker can still be really valuable. So I don't see them dropping out of the equation anytime soon. So that stat that we've been mentioning, that nearly 80% of home loans are written by brokers, it's 76.8%, I think, is the actual number. of home loans written by brokers. That stat is courtesy of the Mortgage and Finance Association of Australia, and they noted when they released it that Australians like the competition that brokers bring to the market. Lots of banks kind of dump their rates with brokers, and then brokers can select ideally the best one for a particular borrower. So that competitive edge can be really attractive. They also have a best interest duty. So brokers legally have to work in your best interest. So even if they've got a really big commission through, say, for instance, an ANZ product, if the NAB product is going to be better for you, they legally have to give you or show you the NAB product. So it's not like there's this kind of dirty secret business that maybe it once was or maybe it is in different parts of the world. So that they're really valued. I couldn't imagine a situation where brokers are completely wiped from the equation anytime soon. But, in time, we might see the balance shift a little bit more towards that proprietary channel like the big banks are pushing for.
Yeah, for sure. This has come up whether to go broker or go direct or go woke and go broker. It's a conversation with my partner, family, and friends. They're like, just go a broker, and I'm like, part of me is hurt by that because I'm like, I work with this stuff day to day, and I'm like, and I ended up just going direct with my home loan lender, but it's the default option for many Aussies is just to find a broker and just kind of have like a hands off kind of mentality. And I think their value lies beyond just finding the sharpest rate. I think for people, particularly with like alternative needs, say they're self-employed or their job history isn't that great or something, brokers have that innate knowledge of working with lenders day to day and seeing information that's not necessarily like in the public view, being able to see that back end sort of knowledge and see which lenders work better with special use cases, or if they don't qualify for one home loan with one lender, does lender B work better? And they just know that all that stuff. It's like a duck to water. So there's still value in brokers there, I can see. But if your home loan needs are simple and maybe you work in the industry such as we do, you might want to go direct. But just broadly, Brooke, did you want to share with us your broker experience in your recent home buying journey?
Yeah, so I bought my place, it's probably 8 months ago, maybe even more now. And prior to finding it, I did actually go to a broker. I didn't have a fantastic experience with the broker, but I mean, as you mentioned before, we work in this industry. My job is essentially comparing home loan products and making sure I'm across the market at all times. So when I went to a broker, I wasn't really super happy with their advice, but it would have been far easier than comparing all the market and then going direct, which is what I eventually did. However, I wouldn't have got the deal that I got now if I went via the broker, purely because the bank that I ended up going with that offered me the lowest rate that was available for me at the time wasn't really an associate of that broker channel. So brokers can only really offer you the mortgages that are on their books at a given time. They can't offer you the whole market. So for me, I've probably saved a lot of money. I'd hate to think how much by going direct. But if I wasn't confident with that, I can see the value in going to a mortgage broker. There was also little things like they explained to me the home guarantee scheme and talked to me about what areas I might find a property like what I was looking for the price range that I was considering at the time, because they were local to the area that I was looking to buy in. So there are those values, that value as well from a broker. But yeah, personally, I didn't end up using it. I ended up going direct when I found my place.
Yeah, I honestly went direct myself, and I think maybe people think going direct is more complicated than it actually is. You'll find that the lender that you're applying with will actually do a lot of the work for you and try and make it as smooth a process for you as possible. Often these guys actually are ex-brokers themselves, so they know the gist of it all. They'll guide you through all the documentation. But then at the same time, it doesn't really necessarily hurt to also see a broker on top of that, so that you see what the broker can do for you and see which rates they're offering, but do your own research at the same time and check whether there are maybe some other products that you can apply for yourself. Good stuff. Well, great insights there, Brooke. Yeah, very interesting talking through what's going on with broker markets at the moment and whether the banks are really trying to shift away from that. Always a pleasure having you on the Savings Tip Jar podcast. Thanks so much for your insights.
Thanks for having me, guys. It's been great.
Thanks, Brooke.
Cheers. And of course, we'll catch you next week when you're filling in for Haz in the co-hosting chair while Haz is unavailable. So looking forward to that
Appreciate
one.
Very exciting.
Alrighty.